IREN stock cooled off a little on Wednesday, closing the session down $1.59 or 2.58% to finish at $60.09 per share. After back-to-back strong sessions that saw the stock jump over 20% and break through $60 for the first time, this kind of pullback is not just normal, it's healthy. In fact, in many ways, today's movement was the kind of controlled pause that confirms a strong underlying trend rather than undermining it. The big story here isn't that IREN dipped slightly. It's that despite profit-taking and broader market softness, the stock held the $60 level and continues to show resilience after a parabolic start to the week. For investors following this story, it's important to recognize just how strong the last few sessions have been. Monday's session saw a massive gain of over 14% as IREN surged on optimism surrounding its growing footprint in the AI cloud space. That was followed by Tuesday's 6.8% rise on confirmation of major AI cloud contracts. Those two sessions added more than $10 of value to the share price, pushing it to new all-time highs and cementing IREN as one of the strongest performing names in the AI infrastructure space. So, with that context, a modest 2.5% pullback is little more than a cooling of the engines after a sustained climb. There was no negative news or downgrade driving today's decline. The movement was almost entirely technical in nature, characterized by a combination of profit-taking and consolidation. Traders who had been sitting on significant short-term gains simply took the opportunity to lock in profits, while longer-term investors used the dip to either add to their positions or hold through the noise. This kind of alternating flow between short-term selling and long-term accumulation is exactly what healthy market behavior looks like after a breakout. Volume today remained elevated compared to the pre-rally levels, which suggests that interest in the stock remains strong. When you see a stock pull back on lower volume than the days it rallied, that's typically a bullish sign. It tells you that sellers aren't in control. They're just temporary participants stepping aside after a big move. Buyers, meanwhile, are still waiting in the wings, ready to defend support zones like $60 and $58. The fact that IREN bounced intraday off the high 59s reinforces that those levels are being respected by the market. There was also a macro layer to today's trade. Across the broader tech and AI infrastructure space, there was mild profit-taking as bond yields ticked higher and traders digested mixed messaging from the Federal Reserve. Despite the Fed's recent 25 basis point cut and hints at more cuts later in the year, the market is still adjusting to shifting data on inflation and energy prices. That led to a rotation out of high beta growth names into defensive sectors like energy and industrials, but this was not a sector-specific rejection of AI names. It was a temporary rotation that's typical midweek after a huge two-day run. At the same time, some investors are still digesting IREN's convertible notes offering from earlier in the week. The company announced an $875 million offering of convertible senior notes, and while that does raise concerns about potential dilution, it also signals something much more important, that institutional investors have enough confidence in IREN's future to provide it with nearly $1 billion in funding at favorable terms. Convertible financing isn't a sign of weakness when it comes on the heels of a major breakout. It's a sign that the company is using momentum to strengthen its balance sheet and fuel future growth. And that's exactly how IREN framed it, as capital to accelerate its AI cloud build-out, expand GPU capacity, and secure additional data center resources. So while short-term traders might have sold on the news earlier in the week, long-term investors are likely seeing the offering as a way for IREN to expand faster. In other words, what looks like a headwind on the surface is actually the fuel for the next phase of growth. The company is building financial flexibility at a time when the demand for AI infrastructure is exploding. That's the context many traders overlook when they focus only on dilution risk. Fundamentally, nothing has changed for IREN. The story that drove the rally remains firmly intact. The company's new AI cloud contracts, covering around 11,000 GPUs, are expected to generate about $225 million in annual recurring revenue once fully operational. That's a huge number for a company that just a year ago was still seen primarily as a Bitcoin miner. What we're seeing now is the transformation of IREN into a diversified infrastructure company that sits at the intersection of digital assets and artificial intelligence. The shift from being a pure miner to becoming an AI compute provider changes everything about the company's valuation model. Instead of relying on cyclical mining income, IREN is now building a recurring revenue stream tied to long-term contracts. And those contracts are just the start. The company is scaling its capacity in British Columbia and Texas, with total power capacity on track to reach 2,900 megawatts. That's enough to support more than 100,000 GPUs, making IREN one of the fastest-growing AI data center operators in North America. This growth trajectory is reinforced by its close partnership with Nvidia, which gives it access to the latest B200 and B300 Blackwell chips. That preferred partner status is a major differentiator. In an environment where GPU supply is limited and demand is surging, having guaranteed access to Nvidia hardware means IREN can deliver for clients when competitors can't. Another key point to emphasize is that IREN's balance sheet is solid. Even before the convertible offering, the company had a strong liquidity position, and its Bitcoin mining operations continue to generate positive cash flow. That mining segment, while no longer the main growth engine, provides a stable financial base that helps fund AI expansion without excessive share dilution. It's rare to see a company successfully balance two such different revenue streams, but IREN has managed to turn what was once seen as a niche asset class into a complementary source of stability for its new, high-growth segment. Technically, today's pullback does little to change the picture. The stock remains well above its key moving averages, and the uptrend structure remains intact. $60 has emerged as the new support line, replacing the $50 level that the stock broke through last week. If that level holds, and all signs suggest it will, the path remains open toward the next resistance zone around $65 to $70. Analysts from Bernstein and IREN Research have already set targets around $75, and with the company now executing on AI cloud monetization, those targets look increasingly attainable. It's also worth noting that short interest in the stock remains significant, sitting somewhere between 10 and 12% of the float. That's enough to create additional upward pressure if momentum continues. With call option volume elevated and traders positioning for further upside, the conditions remain ripe for continued volatility to the upside. The setup resembles what you often see when a new institutional narrative is forming, a shift from speculative retail flows to sustained long-term positioning. So where does that leave us after today's session? In short, right where we should be. The stock has sprinted ahead over the past 2 days, and now it's catching its breath. This kind of measured pause is what helps sustainable trends form. It gives institutions time to build positions and the technicals time to reset. What matters more than a one-day red candle is how the stock behaves around key support levels, and today's price action showed exactly what you'd want to see. Buyers defending $60 and sellers fading out on lower volume. Looking ahead, the next catalysts are likely to come from execution updates on those AI cloud contracts. Investors will be eager to see how quickly the company can begin generating recognized revenue and whether additional partnerships or customers are announced. The broader macro backdrop also matters. Continued Fed easing, strong AI infrastructure spending, and stable Bitcoin prices all feed into the bullish case. In an environment where AI compute demand continues to outstrip supply, IREN's positioning looks even stronger. The combination of efficient power management, access to Nvidia hardware, and proven operational expertise makes the company one of the few that can scale fast enough to meet market needs. So when you put it all together, today's pullback feels more like a reset than a reversal. The story hasn't changed. The momentum hasn't broken. What's happening now is a natural and healthy consolidation in a stock that's up more than 30% in just a few sessions. If anything, it's a moment for investors to reassess, catch their breath, and potentially look for re-entry points before the next leg higher. Stocks that move this far this fast often pause around round number milestones like $60 before resuming their climb. In the bigger picture, IREN remains one of the most compelling hybrid plays in the market right now, combining the cash flow of mining with the scalability of AI infrastructure. The company's long-term growth trajectory remains steep, and the fundamentals supporting the current rally continue to strengthen. Short-term pullbacks are the price of long-term progress, and today's movement fits that pattern perfectly. As long as the stock holds above its breakout zone and continues executing on its AI cloud strategy, the bullish case remains intact. In closing, what we saw today was not weakness, it was digestion. The market caught its breath after a powerful run, and IREN proved it could hold its ground. With strong support at $60, expanding AI contracts, and rising institutional attention, the setup for the next phase of the rally remains compelling. The company continues to deliver on its promises, and the market continues to reward execution over hype. For long-term investors, that's exactly the kind of balance you want to see.